Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in your trading decisions in a very active market. Growth leading the charge. We got earnings out of ARM and Qualcomm to discuss. Lots going on in the market. It's a very busy stretch. Can't report all of it in this day. Be sure to join us in the Traders Lounge if you're a pro member as we go deep into analysis there. Matt, yesterday it was cyclicals. Today it's growth. S&P up, markets rallying, post-election move pretty strong, hasn't it been?
Yeah, it's been very strong, I would say, very consistent, I would say, as well over the last couple of days. Haven't really seen a lot of volatility. I mean, we're seeing strong movement, you know what I mean? But we're
Yeah.
not seeing a lot of volatility, a lot of whipsaw, a lot of aggressive up and down nature of the market. The only intraday pullback we've seen so far is on the cash open yesterday, and that was basically triggered right that retracement ended on the intraday right when it came into the previous resistance level. And so you just haven't seen a lot of volatility here. Broke out yesterday, seeing a little bit of continuation here today when you're looking at this S&P 500 itself. When you're looking at the sectors, Mark, you're absolutely right. Yesterday was a very big cyclical day. And oftentimes when you have those very big days, it takes a couple days to digest that type of price action. And that's what's kind of going on in my estimation.
And that's what you want.
Oh,
Right?
absolutely. That's what we talked about in the Traders Lounge. And the tackle today yesterday was not chasing this aggressive move, but looking at it from a catalyst perspective and waiting on those secondary patterns. We went back to 2016 to kind of understand what patterns to really kind of anchor against. And so, yeah, I don't think it's a negative when you're seeing consolidation after a really strong move, and you're seeing it in industrials. You're seeing a little bit today in finance. You're seeing it obviously in energy. The three cyclical components that did really, really, really good yesterday are just taking a day off. Basically, that's kind of how I see it. To what's not taking a day off is the aggressive side of the equation, discretionary technology and communications, and you can kind of see that in the Qs. We talked about this breakout yesterday above 500. You're seeing continuation saga here today, looking really, really, really good on that breakout, and it's a really decent momentum environment as well on the Qs. If you miss the breakout, tough to catch. I mean, that's just the simple reality. To catch these types of moves, you can't just wake up one day and show up and be like, oh my goodness, let's do something about it. No, there's the market's moving, the market's pricing in certain things here, and so it's going to be a little bit choppy. It's going to be a little bit aggressive. We are seeing that, but what I didn't say was volatile. I haven't seen a lot of volatility. Consistency, in my
Yeah,
estimation.
I love how you say that because I haven't seen anything to dissuade me from selling credits like I love to do, right?
No,
Nothing at all.
no, not in the market. In other areas, like gold yesterday had a pretty oversized movement to the downside, but from an equity perspective, you really haven't. And then honestly, today I'm seeing a lot of standard earnings moves here today. It is a big earnings day. A lot of S&P 500 companies reporting earnings here today, and obviously, you also on top of that, you got the Fed here today as well. Market seemingly doesn't really care about that right now. Still price again Donald Trump's victory, as well as a fairly aggressive move in the cyclical and aggressive areas of the market over the last 2 days.
Yeah, absolutely. Not a lot of economic news this morning. Jobless claims came in right in line with expectations. Now, the Fed has been talking about labor, putting more emphasis on in the last couple months. They meet today. 2 days after the election. Here we have a Fed meeting. The FOMC statement, where it is widely, like almost 100% expected that they will cut by 25 basis points. There has been zero chatter indicating that that will not be the case. In fact, the only small sliver of odds is that you get a 50 basis
I
point
want
cut.
to meet that 1.3%. I want to meet that 1.3% who thinks the Fed's going to jump in today's week and shock the market with the oversized cut when the market when bonds and the dollar's going up fairly aggressively. I'd like to meet that 1.3%.
They're optimistic bunch. They're an
Listen,
optimistic.
maybe they're
That
right. Maybe
1.3.
they're right, and I'm going to look foolish by saying that. But I'm on the freight train of the 98.7% here today. I just don't see the Fed doing anything to really insert their name into this
Yeah,
conversation right now.
absolutely. I mean, you expect Jay Powell's press conference to be a version of a Jay Powell press conference that we have seen, whether in an official Fed capacity or on a panel, about 25, 30 times this year, right? That message being, listen, things are going good. We're happy with the progress. We're keeping an eye on labor, but we are going to be data dependent moving forward. I mean, it's hard to
Yeah.
not see that version of Powell. Now, how the market
The
reacts to that
economy's
version.
the economy's doing better than we expected, but we're a little bit concerned on inflation. We're still on our path down to 2%. Isn't that his message today? Like,
That is his message. What will the market's reaction be
yeah,
to that message? Look at the dollar, look at bonds. Those have been storylines. But I'm with you 100%. It's hard to see any surprises out of Jay Powell. It's just what will the market reaction, particular yields, particular
well, then
treasuries, particularly the dollar,
particularly
right?
those algorithms that have
Yeah.
seen massive price movements in front of the Fed. Oftentimes you see profit taking environments after that type of sizable move. So I'm very interested in the technical side of the equation because secondary patterns are going to be really important in this initial move in the market. I am less interested in what Jay Powell has to say because I'm not sure he's had the data necessarily in any capacity to make any degree of changes to the probability of the rate path in 2025 yet. There's conjecture, context, and obviously you can take what Donald Trump has said during the election season and try to apply that on how that's going to be applied from a governance perspective, but that's impossible to do. People say things during election season that don't actually come to manifest itself in governance. And if you're the central bank of the United States, one of the most important entities in the entire world that controls the value and supply and demand of the United States dollar, you don't have the information yet to understand what that environment's going to be yet. So I think Powell's going to try to bunt the runner across, or I think he's going to try to take a walk here.
Yeah, absolutely. While all that's going on, earnings season continues. What do you have for us today?
Yeah, we do got a few stocks in the news here today. Costco, ARM Holding, Qualcomm, all in the news here today. Costco reported EPS with a slight beat on EPS, 10-cent beat on EPS. Revenue also came right kind of in line with revenue up 1% year over year. Just a walk in the park type of report for Costco. But Costco's getting a bid coming into a massively important resistance level. Gonna take a peek at their chart here in a second. ARM Holdings had a really good report here today, in my estimation. That came out with just a 5-cent beat against EPS, which is going to wake nobody up when it comes to a semiconductor high flying AI name. No doubt about that. Revenue also one of those situations where it was just up 4% year over year. But remember, guidance takes on a very important part of this equation, and they did officially raise guidance slightly as well. So despite the paltry beats on the EPS and revenue side of the equation, guidance was fairly good. I won't give them the hat trick treatment despite the beats on all three, because you have to beat EPS by a wider margin than we're seeing in the broad market. ARM doesn't do that in my estimation. Qualcomm comes in with an EPS beat of 2%. Revenue did beat pretty healthy, about right above the 10 billion number. Revenue was up 18.6% year over year, and they also raised Q1 guidance as well. So what you're seeing here today in the aggressive areas of the market a little bit is you're seeing two guidance updates, and taking into the account tech and cyclical were moving yesterday. You get a couple guidance updates here today out of ARM and Qualcomm. That's obviously a little bit of enough to propel the AI conversation, the technology conversation, the semiconductor conversation, at least on this one day. And so when we're looking at some those stocks out there, let's take a look at the two semiconductor technology names. ARM, and again, ARM really had a decent guidance, but from an EPS and a revenue perspective, it wasn't really great there. A little bit of a gap down on the EPS beat, but as you can see, and you don't see it necessarily here, but you can see the gap down. That gap down is often caused by the cash open that doesn't like what they're hearing from that overall perspective. You see that initial sell on the EPS. But then when the cash open comes out, you see that strong move. That's a pretty good indicator that you're seeing that move coming right back up to that 160 level. This conversation on ARM has a lot of chop between 140 and 160, a lot of technical analysis between those levels. Once you get to 160, it does open up all the way up to 180. So pattern development at 160, anybody on ARM? When you're looking at Qualcomm here, QCOM, when you're looking at Qualcomm tried to gap up, sold off a little bit on their earnings after the cash open, bucked the normal trend we're seeing in the NASDAQ here today, which is up 1% in totality. But you're also talking about a pretty important breakout channel at that 180 level where it found resistance today. You see where it found resistance today. You know what you need to see in pattern development at that level. And so 180 really kind of proved to be a tough resistance level. You definitely want to see some pattern development there as well. When you're looking at Costco here, Mark, not the best earnings report, but a good decent day to report earnings in. You really came right up into that overhead resistance as well. And so what we saw on both Qualcomm and Costco is you saw markets trying to giddy up and go, both finding a little bit of resistance. Obviously, ARM has resistance on top of it, but all stocks kind of in breakout type situations. Obviously, you want to see pattern development at breakout situations. And if you don't know what pattern development at a breakout level is, come to Tackle Trading, sign up for a pro membership, and we will teach you all about it and also help you understand how to apply it as well, because that's what we do at Tackle Trading is we teach people and then we help them apply it as well. Come check it out. Sign up for a pro member. You'll love being one. But that's all we got for stocks in the news here today.
Yeah, interesting commodity action. Whenever you have a big event, sometimes things lie. I think copper was lying big time yesterday. I think today's more of the truth. Might say the same in precious metals. You had a lot of negative price action yesterday. In that initial algo, what does it all mean? You've seen a lot of snapbacks. Break down the technicals for us in a very interesting commodity
Listen, we
complex
talked
today.
about this yesterday in detail during the Traders Lounge, and the entire analysis yesterday was an oversized movement to the downside based on algorithm moves that were based on the United States dollar having a historic day yesterday. It was tough to see, obviously, sometimes when you see that type of volatility, but context is important to understand. And the base case was a little bit of a snapback on the dollar. And if that's going to be the base case, you're going to see a little bit of big upward movement in price on the commodity side to kind of alleviate that. Mark, you look at this as a 2-day move, and it makes a little bit more sense than that initial 1-day strong move on the dollar, initial everything on the commodity side down. That was obviously a little bit out of control from an algorithm perspective. I think you're seeing the real price action coming into the market here today as you're seeing the dollar come down a little bit, gold responding off that 50-period moving average, showing a little bit of stabilization, copper trying to wipe out their candle from yesterday. That was a violation. And yes, I do agree with you that we are seeing a better move today, not just that it's up, but that you're probably seeing the truth of the market. The truth of the market is not a big down and a big up today. The truth of the market is probably the breakout from a couple of days ago. And so you're basically cleaning that back up, and you obviously want to see volatility decline because we haven't seen a lot of volatility in the stock market. We have seen a tremendous amount of volatility in the commodity market. And so this is where you saw those random oversized movements. They are getting cleaned up right here. It's good to see, but you're going to need to see a little bit more doji analysis here to really kind of clean up that volatility. And you're seeing it across the board in the commodity space. Gold, I love this candle on gold a little bit more than the candle on copper, because the candle on gold does do exactly what I'm talking about. It starts to slow down the movement. We're not seeing that on copper yet, so you certainly want to see that simmer down and slow down. Silver, a little bit similar to what you're seeing on gold, a little bit of slowing momentum. Obviously, we would like to see a little bit more of that on both sides of the equation.
Yeah, listen, we're going to continue these conversations in the Traders Lounge. I want to look at Bitcoin. I guess we want to go to church here for a second.
Listen, we're going to church here until we see what pattern develops here, because you had a very strong movement on the crypto side of the equation, which absolutely matched where the market expectation was coming into a Trump victory. And now what are you seeing? A doji at the top of the channel, Obviously, you want to see a high base here. High base
A
breakout
classic
makes a
high
lot of
base
sense.
formed here will be hit by every trader in the universe. You
Yeah,
know,
so I just wanted to bring it up because you're seeing the early development of it. You could see a pullback here. Inside candle would not be bad either, but you're secondary development here in the broad market after a catalyst event is always going to be important. And remember that catalyst event does include the Fed here today. After the Fed here today, Mark, we start to get through the conclusion of earnings season. We're through the heavy pockets of economic reports over the last couple of weeks. We're through a presidential election, which was obviously hot and heavy, and we're through a central bank just in the last 2 weeks. And in the next 2 weeks, yeah, you continue with the earnings. There's no doubt about that. But nothing like we've been going through. We're now at around 85% reported rate, and so you're just coming into a little bit more clean environment where we're not going to be talking about this massive macro news and how it's going to impact the market, but you should get back into some clean, pure technical conversations. And that's where we love being at. When we get catalyst events, they get priced into the market, and then you just have technical conversations. It's a beautiful thing.
Yeah, absolutely. Lots of conversations. Traders Lounge is going to be very active. Was active yesterday, helped our members out. We'll be active today. You can be part of that fun and profit. TackleTrading.com. Sign up for that 15-day free trial.